Finance can be messy, but don't worry. We clean it up with facts, fun, and maybe a little sarcasm. Welcome to the Financial Sandbox. Let's get into it. Today, my guest is Deborah Froling. Now, Deborah and I met a number of years ago. We won't say how many, but she has always impressed me as an extraordinarily smart person. She's an attorney. She's in the financial services environment in an area where when we go to conferences, it's men and a handful of women. And I always admire women who are in this space because it's not easy. And I've interviewed a handful of women in this space, and sometimes there's some unique conversations that happen. Same thing as a person of color in this space. But welcome to the show. How's it going?
It's going great. I like that intro.
Good. So you've had a sort of remarkable career in real estate and capital markets as an attorney in financial services. How did you start here? Was it on purpose?
No, there was no intentionality at all. It really kind of fell into my lap when, after I graduated from law school, the first job I had was at the SEC. And I showed up on my first day. They thought I was an accountant. I was like, clearly I'm not an accountant. I don't know anything about numbers. I don't like numbers. Numbers are bad. That's why I went to law school. And they put me in the REIT group. And, I could have gone into any of the other branches and done, fashion or what have you, but they put me in the REIT group. And
that's the Real Estate Investment Trust Group.
Real Estate Investment Trust Group. And it was hot. I mean, it was 1993. All of the big old legacy real estate companies were going public. And I walked in and everybody was running around like chickens with their head cut off because Sam Zell's first REIT actually just blew up.
Oh,
their IPO just blew up. And so they're like, hi, sit somewhere and just chill until we figure out what we're doing. And I'm like, okay. And every year at the SEC, you were able to kind of move groups so you could get a different experience, work with different people. I never left the REIT group. Like, I was having so much fun kind of understanding like all of this stuff, and everything was new. So, the magic page and all of these issues that came up with all of these roll-ups that were going on at the time were fascinating to me. So I never left. They never made me leave. So after 3 years, I was like, I've learned a lot, and I was highly recruited out because of my involvement at kind of ground level of this.
Sure.
And so I've never really left. But it was really just by chance. And so I've built on that over my career in private practice and kind of got me to where I am today.
So what is a real estate investment trust?
So a real estate investment
trust. My audience, what is it, and how did it start?
Well, it started because real estate folks like to use other people's money. I mean, that's always been the case, right? Mm-hmm. And it's a vehicle. It's a tax-driven vehicle that provides some tax benefits to investors and to the entity itself. It's a corporation. Some of them are trusts, but most of them are corporations in Maryland. And they don't get double tax, right? If they comply with the REIT rules, their distributions to investors are taxed at the investor level and not at the corporate level. So unlike, Coca-Cola, which when they get profits, they get taxed on that. And then the shareholders also get taxed on it. A REIT doesn't do that. And so it really was kind of at the time, I mean, they were created in the 60s, but they really took off in the early 90s. And it was partly because of the tax code changes in 86. A lot of folks were doing LPs, and those were like a bad word. And so they wanted to figure out another vehicle. Limited partnerships. And so they wanted another vehicle. So they did all these roll-ups. They took all of their syndicated partnerships and they rolled them into a REIT, and an UPREIT in particular. the 721 exchange was really that was the impetus for it in the beginning. And so they all then did IPOs on their REITs, which was a diversified portfolio of real estate. That's really at the end of the day, that's what it was. It just happened to be a new structure.
This is awesome because, as you know, I work in the alternative space, a lot of 1031 exchange business, and a lot of Delaware statutory trust options will roll up into a 721 UPREIT. So this is a great opportunity for me to ask you a question and say, for my audience, what's a 721 UPREIT? And why is that such a big deal today?
Well, like 1031, a 721 exchange is a tax deferral vehicle, right? So you can contribute your property in the DST to a partnership, and that is tax deferred. The partnership is owned by a REIT, right? So the REIT itself is the traded or not traded, but the public or the issuer, and all of the properties are owned by the partnership that you have now just contributed your property.
Correct.
The problem is, and that's great, but you also no longer have a 1031 exchange possibility. You've stopped that, but you still get tax deferral going into the operating partnership.
Correct.
What happens is once the operating partnership either sells the property that you contributed, or you want REIT shares and you want to get out, or you just want REIT shares. I don't know why you would want REIT shares just for REIT shares, but you trigger your tax. So that is the triggering event for your tax. But the actual contribution from the DST into the operating partnership gives you a diversified portfolio, because you now own all of you own a small piece of all of the properties at the operating partnership level, but it also allows you to time your tax without dying. I mean, that's the
exactly right.
You don't have to die.
So, and this has been conversation lately because some of the big wirehouses are getting into the DST and the 721 space. And I got a call the other day from someone who said, well, wait a minute, I can't go from my 1031 exchange into the UPREIT, into the 721. That's what I was told. And so there are a handful of people who really don't understand the process. So I want to go back to that again and let you reiterate that. You do the 1031 exchange, then you go into the Delaware Statutory Trust, and then you do a 721 UPREIT. Right.
So, well, the 10th, you sell your property, and with those proceeds, you roll that over into a DST. That is a 1031 exchange. That is tax deferred until you trigger the tax. The contribution from the DST to the operating partnership then is also tax deferred, but it is not a 1031 deferral. It's a 721 deferral. It's just a different section of the code, but it is tax deferrable. The issue then is that you can't take those proceeds when that property is sold and put it into another one, because you're no longer in like kind exchange. You're actually in a partnership, and you can't do a 1031 with partnership interests.
Yeah. And that's often the conversation I have with people, because they've got a couple of friends that are going to put an LLC together, and like, I'm going to use my 1031 exchange money and I'm going to go into that LLC. And you're like, no, you can't do that either.
No.
So
no, because it's not like kind.
Right. It's not like kind. And that's the key. So talking about like kind, there's a couple of different options when you're doing a 1031 exchange. And those two options, you can go into a Delaware Statutory Trust, or you can do a tenant in common transaction. What's the difference? And can you explain the difference between a tenant in common syndication and a Delaware Statutory Trust?
There aren't very many tenant in common syndications being done. Lenders are not interested in having up to 35 unrelated people who need unanimous consent to do anything. In 2008, we found out quickly the limitations on that structure, and how complicated it was. Lots of people lost their properties, etc. They're very similar. Again, they function as a 1031 tax deferral, but the DST has become kind of the option of choice for lots of reasons. You can have many more people in it. There's no unanimous consent required. But there are also many more restrictions on what you can and can't do within a DST. And that, from an operational perspective, creates some issues. You can't refinance the debt. You can't do significant capital improvements to the properties in the REIT. I mean, in the DST. Yeah. And so it gives lenders better accessibility to the manager, the trustee, but it also creates many more operational, from a real estate perspective, operational challenges.
So you went from the REIT space, and then what was your next step?
I don't think I've ever really left the REIT space, to tell you the truth. I mean, I've gone from doing like really cool, sexy IPOs on Wall Street with Lehman Brothers and Merrill Lynch, which of course don't exist anymore, but that's a different story. It had nothing to do with me in particular, just saying. Exactly. To doing private stuff, to doing equipment leasing, to doing BDCs, to doing private placements. So, all of that is within the band of real estate related types of things and alternative investments. It just somehow, along the scale of, again, big public IPOs to, $2 million private placements to friends and family, I've kind of done everything there and in between.
So questions pop into my head as I do this. When you look at, let's go back to Deborah Froling at 13. What would you tell her?
What would I tell her?
Today.
To keep doing what she's doing. I apparently have, according to my parents, and I take them as, good sources of information, I've always been like this. And so I'm very direct and very honest when it comes to things that I see that are wrong or right, and never gave a whole lot of weight to people who told me I couldn't do stuff. And I just, I would tell myself to maybe tone it down a little bit over the years, perhaps. When I first came out, I was a little bit of a bull in a china shop, but I think I've softened around the edges. I think being a parent and just getting older is part of that. But, you pick your battles. And there have been some battles. It's definitely challenging profession that I chose in general. But then when you get down to securities and real estate, for a woman, it is a challenge, as it is for people of color. I mean, it's, we go into those conference rooms or the exhibit halls and we look around and we're like, yeah, there's a whole bunch of guys in dark suits here. There's a lot of them. They're like, who are you? I'd be looking for somebody I don't know by face. And they're like, well, what does he look like? I'm like, I don't know. He's a white guy in dark suit. So that could just be not helpful. But I think I've used it to my advantage, frankly, right? Like there are few of us, but I think those who are there are kind of paving the way.
Absolutely. Absolutely. So you've worked in the public sector and the private sector. How does your approach differ in either? Is there a different Deborah that shows up?
No, this is the one you get. This is the one you see. This is the one you get. But the issues are different, right? So the sensitivities are different. Obviously, if you're dealing with public clients, there's public disclosure requirements. There's Reg FD, where you can't say certain things to folks that you wouldn't say publicly. So there are different restrictions. But in terms of my approach, I don't think it's any different. But it does, there are different considerations when you're looking at whether you're doing a private deal or a public deal.
Right. Same thing. So I've seen you on different moderated panels.
It's always a joy, isn't it?
At industry conferences. What conversations and topics most excite you when you're on a panel? When someone invites you, what kind of a panel do you want to be on?
My criteria for doing panels has changed over the years, but in a lot of cases, it's really trying to focus on stuff that's practical and will help people, right? Like, I don't like these esoteric discussions about this legal theory and that legal theory. I could, whatever, it would just put me to sleep. But trying to help people kind of from a practical perspective, right? Like, if you want to do this, here are the things that you should be thinking about. And it's really what I do with my clients, right? I sit them down. I get calls from people. I want to do a REIT. I'm like, why do you want to do a REIT? They're like, well, because that's like a thing. And I'm like, okay, that is true. It is a thing. And it's a real estate related thing. But who's your audience? Who are your typical investors going to be, right? And if they're not, people who have tax sensitivities that a REIT vehicle makes sense for, then I'm like, well, why wouldn't you just do an LLC or an LP? They're like, but that's not, what people are talking about. I said, well, they're talking about real estate investments, right? The form and structure has nothing to do with whether or not you can go out and market these things. It's really, you need to make the structure fit your audience and the type of property you want. If you're buying golf courses, that's a different vehicle than if you're buying a multifamily or student housing. It's just different. And so I love the part of kind of trying to piece together the puzzle and kind of get them to a structure and a sales channel that makes sense for them. So those are the kind of things that I really like to talk about, because sometimes you have people in that room who are just showing up for the first time and don't know anything about it. So you want to educate them on kind of the things to be wary of, the things to think about. And usually I have a call with a client or potential client for an hour, and sometimes they never call me back, which is fine, because I've given them all sorts of reasons why what they thought was really sexy and interesting and, is going to make them a ton of money is definitely not going to do that.
Right.
Because they haven't thought through all of the problems and issues and things that you and I think about when we're trying to figure this stuff out. And they're like, oh, well, I didn't know about that. And it's going to take me how long to do that? Because they all want to do like the non-traded stuff. And I'm like, you're not going to compete with some of the big boys, right? So unless you have $500 million of properties ready to go, that's not where you start. That's kind of where you end, but that's not where you start. And so building the track record, what is your track record? Have you ever done this before? Well, I bought a duplex. Well, that's great. It's not going to help you in this area. And those kind of things. So to me, that's kind of the stuff that's worth sharing in terms of knowledge. And I always like talking about, how to make it in an industry where you're like the only person, you're the unicorn.
Right. So how do you see the DST market going right now? Where do you see the growth? Or I see that the big players, the BlackRocks, are trying to dip their toe in this space. What are your thoughts?
Well, I can't say I study the market because I'm a lawyer, not a business person, but there are folks who are kind of closer to the real estate who that, DSTs make sense. They're programmatic in a sense that the structures are pretty well settled and kind of the docs are pretty well settled, but they're harder to do on a big scale, right? Like you have to do a lot of them. And for the Blackstones and the BlackRocks and all of those folks, the Blue Owls, and I don't know, there's all sorts of other colors. There may be a red something, I don't know. People like owls and rocks. I don't understand. the bigger programs, the non-traded REITs and such are much better vehicles for that diverse portfolio. The economies of scale are different. Each offering, that goes out has due diligence reports, going on. There's, a certain set of investors. They're getting bigger. They're bigger over the years, but they're not that big that the economies of scales are so much better than doing kind of the more traditional either interval funds or BDCs or, REIT stuff. You're muted.
Yep. Sorry about that.
I was like, did I do something?
Really quick.
No worries.
So when you see the changes here, because we met at ADISA, that was 2 other iterations before, right?
I was there on day 1. Yes, I was. Many, many, many years ago. They're like, is this your first time? I'm like, no.
No, same here. So where do you see, do you see more growth in, as you and I are women and people of color, do you see growth in the space of reaching out to different communities and different demographics to get growth in, or is it the same group of dark suits and guys that you've been hanging out with?
There's a lot of folks who have been around for as long as you and I have, but there are also new folks coming in, and there are new ideas and new products coming in, where I think we need to get to is more sponsors and issuers, kind of in those other communities, right? And kind of finding those folks who are interested in, growing generational wealth and giving them the means and the education to do that, right? They do it on a smaller scale kind of within their communities, but to try and get them more in the mainstream of the alternative space. I was talking to a friend of mine yesterday, and he's in private equity, but he's been involved in our industry for some period of time. And he said, we live in our own little bubble, right? Like we think that ADISA is the end all be all, or the ADISA universe, right? It's not. If you look at alternatives in general, we're a very, very small piece of it, including, the big boys of the Blue Rocks and the Blue Owls, whatever it is. I don't know, the blacks and the blues and the reds and the greens. And so I think trying to find those, and there are some new folks around who are doing that, who are helping to do that. The students that we bring in, the interns that are very interested, and so growing them from babies to adults is great. But trying to find, I think, more of the sponsor issuer folks who are in those communities, who are using their platform to benefit their communities, getting them in as investors, or teaching them how to be issuers themselves. I mean, I think that, those folks, I think, are the audience I would like to see join our industry. But it's hard to do that, and I think it's really it's something. It's something we need to do better at.
Right. So looking ahead, where do you see the biggest opportunities in the real estate capital markets? And maybe that's an offshoot, next step question of the last.
Yeah, I mean, there's only so many apartment buildings one can do. Sorry. I mean, I think I'm seeing, single family homes to rent stuff. I'm seeing real estate adjacent types of things. You're seeing more energy stuff, oil and gas stuff. I mean, oil and gas stuff has kind of gone in and out of favor over the years. I did public oil and gas limited partnerships, which is kind of an interesting turn for me. But I think as Gen X and Gen Z and I don't even know what the other ones all are, start looking for those avenues of investment that they will look for opportunities. And our space still remains challenging, right? It's accredited investors only. It's trying to find the right fit. People with good track records, you and I've seen some of the bad actors come back time and time again. Good for them, I guess, if they've rehabilitated themselves.
Well, I mean, being at my
their
firm,
prison sentences, I don't know.
At my firm, for example, we have a heck of a due diligence team. Mm-hmm. So we're always very cautious about what we put in front of our clients. I had a call recently with someone, and right before the call, my aunt, who is 88 years old, called me. Exactly. And he heard, because I didn't mute. And so I was saying goodbye, and he then said, "Who is that?" And as we got into the conversation, this was a new client. He finally said to me, he said, "So would you put your aunt in this offering?" And I told him, I said, "Look, if I can't, then I'm not going to bring it to you."
So the interesting thing is, when I first started the SEC, that was my thing. Would I ask my mother to put her hard-earned money into any of this stuff? And the answer is almost always no. And my poor financial advisor is like, "Well, I want to push you in this." And I'm like, absolutely not. Like, no, I am like totally into mutual funds and bond funds. Cause I'm like, one, I have, securities restricted lists that I don't want to keep track of. And I just, I'm a lawyer because I'm a conservative person with my money. And so I'm not a risk taker, and I don't want to try and pick and choose winners and losers. And I'm like, just put me in mutual funds and take your fee and just be happy about it, because it's not a lot of work.
So as a woman who's built this leadership role in what's basically a male-dominated field, what advice would you give to young women entering real estate law or finance?
You need a good backbone. So there's a couple of things. One is, are you sure, right? Like I always ask, you sure you want to do this? Because it's expensive to go to law school and it takes a lot of time. That's one thing. The other thing is really to be authentic, right? I am who I am. I've always been who I am. And people pick up on that, or they know when you're not being genuine. And so I'm a sports fanatic. I have always loved sports. I grew up with sports. I had baseball encyclopedia when I was growing up. I knew how to score, use the scorecard and baseball games. But if you go into a room with a whole bunch of guys and they're talking about sports and you know nothing about it, and you try to join in that conversation, they're going to know that you have no idea what you're talking about. And when you do know what you're talking about, they all look at you like, how do you know that? Like, why, clearly you're a woman. You shouldn't know that. I'm like, yeah, okay. And then I start going into more detail, like, yeah, you really do know your stuff. I'm like, yes, I do. So be genuine, right? Be your authentic self. But also learn the cue, like learn the emotional IQ, the fancy stuff that they talk about, but really understand, what you're trying to do and keep your goals in mind, right? Like know where you want to get to and know how to find those people who are going to support you and push you along and be your board of advisors, right? Like I have people that I reach out to on a regular basis and go, this doesn't, I'm uncomfortable about this, or how do I approach this? And they're always willing to take my call, which is shocking after all these years.
So what I'm hearing is you have your own board of directors that you run your own conscious by to help you there.
Yeah, I mean, and you need your mentors, right? Those people who are doing what you're doing and you want to, learn from them. Back in the old days, we would sit in partner, as a young associate, I would sit in partners' offices and just listen. on conference calls and kind of when they are meeting with clients and kind of understand how they approach different things. Clients won't pay for that stuff anymore, so you have to find other ways of training folks to do that. But you also need allies, and there's a very big difference between allies, sponsors, and mentors. And sponsors in particular are those people who are speaking on your behalf when you're not in the room, right? Those are the people who you also need, right? You need your mentors to kind of teach you. You need allies who are there to kind of help support you along the way. But you need your sponsors who are going to be in that room and kind of speak out on your behalf when they're making decisions about who's going to get what assignments, or, is this person somebody who you can, trust to run a particular deal, and those kind of things. So having all of those things. I am sorry, that is my cat. I don't know if you can hear it.
Wants to get in on the conversation.
Cat is 15 years old and losing its mind right now. Anyways, I don't even remember what I was talking about. Shh. Hey. Anyways,
we're talking about women in entering law and finance, and
it's a tough field, and it has been historically. But you're seeing more. I mean, you're seeing more and more women, and that's great. But you're also seeing a lot of them leave, and that remains a challenge. Is getting them in. Everybody kind of starts off at the same level, but then as you go through your career, you advance. Either you drop out, you change careers, you take time off for families and other things, caring for elderly adults or whatever. There's a point in time where there's still a convergence where men continue to advance and women tend to lag behind. And the pay is, the pay differential continues.
Sure.
To this day.
It's interesting. It's a lot of what you were talking about. It's a lot of what I did when I came in, and you saw, because I would just sit in a room and listen. And we were often sitting near each other.
Those like minds kind of, gravitated towards each other because we were the others, right? Like we were different, and in a visible way, right? Like it's not easy to hide, what you are. But there are also, there are other folks who are challenged in other ways that we don't see. But we have seen it improve over the 20 years ish that we've been around, but we still have a long way to go. You still see, I don't know what the numbers are, probably 75, 25, maybe.
Yeah. So,
and whether the 25 is actually folks who are in leadership positions is another challenge, right? Yeah. They could be the marketing people, they could be investor relations people. They're not the CEOs, the CFOs, the CCOs, that kind of stuff.
Oh, it's so great. You just led me to my next question, because as you know, Concord is led by a woman, which is fantastic. We don't see a lot of women in these high-end leadership roles. You as an attorney, you in this role, what would you say to women leaders right now, and women who want to be in that CEO role?
Everybody's path is different, and understanding that everybody's path is not a straight line, right? Like if I told you kind of all of the ins and outs of my career, it would look like we were having an earthquake for the up and down. But I think that it's incumbent upon the current women leaders to look behind them and identify those who are coming behind them who have the potential to lead. Not everybody does, and not everybody wants to.
Right.
But to find those folks and to then sponsor them and mentor them and give them opportunities. I had a discussion many years ago with a partner of mine, and he was like, well, I'm working with a woman. She's really great, but she just had a baby, and I've got this big trial, and it's in a different place, and it requires a lot of travel, and I'm not going to ask her to do it because I think she shouldn't want to do it or something. And I was just like, maybe you should ask. Maybe you should just ask and
let her make the decision.
And let her decide whether I when my kids were little, I was like, get me the heck out of here. I need a whole night's sleep and like my own bathroom. It's like the greatest thing in the world. But ask and don't assume that she doesn't want to do it because she's got a baby at home or a 1-year-old or a toddler or whatever age it is. And he goes, I should do that. I'm like, yes, you should. And he did. And 6 months later, he came to visit me. He was coming to our office for something. And he said, I took your advice and I asked, and she said she wanted to do it and she did a great job. And I'm like, imagine that. And so I think it's incumbent upon the men and women in leadership to kind of identify the next gen, right? To do that succession planning, the kind of who's next up and who has the potential that we should be promoting, and give them opportunities to lead. If there's a committee, if there's a, assignment, if there's a client who needs, more handholding, give it to them, a high profile assignment of some kind. Let them take the reins of those things and let them try.
Absolutely. It's always fun to go to one of the conventions and find a group of young people, men and women, people of color, and because I'll gravitate over to that group and say hello, because they want to be welcomed in, and we have to welcome them in. And
I am famous now for all the students that come in to, especially like we do the next gen women's, it used to be the women's lunch. It's now the next gen thing. And all the students come in like in a horde. And I'm like, oh, no. And I yell at them and they look at me like, who are you? And I'm like, don't worry about it. I said, but each of you needs to go sit at a different table. You cannot all sit together. You need to separate yourselves, and you need to go to a different table. And you need to meet all of the people at the table that you're sitting at so that you can then take all of that information in from them. And so Dave Wilson and I, it's like, have you talked to the interns? I'm like, yes, I have talked to I yelled at them as soon as they walked in the door. He goes, good. I think I warned them about you. I said, well, if they didn't know about me before, they know about me now. And then I go and check on them. I check on them during the conference. Are you guys doing okay? Is there anything you guys need? Is there some introduction that you want? I'm sure I know whoever it is you want to meet. So let's make that happen. But that, I don't see enough people doing that. Right. And that is, I think, incumbent upon us to do that. And it shouldn't just be us, right? It should be everybody.
Yeah.
But we should take time to try and bring new folks into the fold. And to not just bring them in, but to kind of guide them.
Right. Yeah, I do the same. It's funny. I was at ADISA and I saw 3 of the students together. And I said, what are you guys doing together? You guys should all be going different directions and meeting different people. You should each be standing at different sponsors and different companies and soaking in the knowledge. You can come back later. You guys are all going to be on the same bus going home.
You guys can all go to happy hour afterwards, but
right, exactly.
Now this is your time, right? We're giving them an opportunity, and what I get really frustrated at is folks who don't take advantage of those opportunities when they come about, because they don't always come about.
Yeah.
And we need to, as the elders, we need to make that happen more often, and in our own companies, right? Like I work with a lot of young associates and try to guide them as best I can. But it's something the industry needs to do. I think folks are focused on it, but not probably as much as they should be.
Yeah. So what I've learned about you today is that you're a serious sports person.
I am.
So we're about to end, and on my wrap, I like to ask a unique question. So I'm going to go to your sports background.
Okay.
If you had the chance and you're heading down the road to law school, but there's a sport, they're saying, hey, we'll give you a scholarship, which sport would you have picked?
Ooh, is it a sport that I can play, or is it just my dream sport?
Oh, well, let's go dream sport.
I I played a lot of sports, but I wasn't very good at any of them. A scholarship to play. Well, I wanted to play baseball.
Yeah.
So I was the first girl in my hometown to play Little League. And because as I said, I grew up, I love baseball. However, the boys were not particularly fond of the fact that there was a girl playing on their team or on the opposing team. And so I got beaned quite a few times when I came up to the plate. And after making the political statement that I did of being the only girl playing on Little League, I decided the long-term brain damage was not worth that political statement any longer. And I quit. And as a protest, a further protest, I refused to play softball. Refused to play softball until I met my husband and we started playing in an old people's like co-ed league. And then what I loved is that, and I'm a left-hander, so whatever. Apparently the girls' position on softball teams is second base. Well, as a left-handed girl, I can't play second base because it makes no sense to play second base. I'm like, put me at first. They're like, oh no, you can't play first. I'm like, I can play first, but I can't play second base because I'm a left-hander. That is going to be an impossible, like, physical thing for anybody to do.
Right.
So they bring, all the guys, as soon as you get up to the plate, because you have to have so many women on the field and have so many people bat, so many girls bat, they would all come into the infield and I would bloop one or send one well over to the outfield and they all would look and go, It only worked the first time, but it did give me great pleasure. And I finally did start to play first base.
Awesome. What do you think about today, 2025? There are new women getting into really visible roles in football and baseball. What are your thoughts?
Long overdue. Absolutely long overdue. And not necessarily even on the field, but even in the front offices, in the coaching staff, and the referees. I mean, the fact that we are still like one out of like 1,000 in, football refs and, baseball umpires. I mean, the woman who called a major league game behind the plate was like, everybody was losing their collective minds. And I'm like, where there should be like a whole crew of women. Like, I don't understand what the problem is or why people are freaking. I mean, it's a good thing, right? Like, it's good to see them. But the fact that we are in 2025 and we've got one, I mean, they couldn't do any worse than the men. The officiating in most sports is atrocious.
Right. Well, it's been amazing having you on. And I every time I see you, it brings a smile to my face, and we always embrace. So when we talk, so I'm embracing you here online. Well, folks, that's a wrap. Don't forget to like, subscribe, and stay tuned for more raw, real financial talk in the sandbox. And that is a wrap.